Good morning and welcome to the Coffee and Cap Rates podcast, your go-to source for New York City's latest commercial real estate insights. This program is brought to you by Ariel Property Advisors.
Hi, everyone. This is Shimon Shkury with Ariel Property Advisors in our podcast, Coffee and Cap Rates. Thank you for joining me. And I'm here with my partner, Sean Kelly. How you doing, Sean?
I'm well, Shimon. How are you?
Excellent. Good to have you here. And our Director of Sales, Stephen Vorvolakos, was here with us today as well. Hi, Steve.
Hi, Shimon. Always happy to be here. Thanks for having me.
And we're going to talk about the Brooklyn market. So our company put out the report for the first 6 months of the year of 2025. It was pretty interesting. Yes, dollar volume went down a bit, but what's really interesting is the command of the Brooklyn market compared to all other boroughs, specifically in the free market world of multifamily, in the development world, and in retail. And so Brooklyn, it has woken up from an investment perspective. And I'd like to start and speak about the free market world first. And what we see there is that the fundamentals are through the roof. In general, rents have gone up 9 to 10% year over year. We see that the free market world on average throughout the city is still well below peak, about 24% below peak. But the interesting part about the free market world, it started to climb up since 2024, which provides a lot of investor conviction. And Stephen, why don't we talk a little bit about what happened in transactions in the free market world in the past 6 months?
Absolutely. So first half of 2025 in Brooklyn, there were 282 transactions that are multifamily, just over $2 billion in dollar volume. That was a 10% and 14% increase respectively. And keep in mind, that's particularly impressive considering last year, the first half of the year had the deed in lieu foreclosure sale that we had spoken about last time at 9 decal, $672 million, Brooklyn's second largest sale ever recorded. So the fact that we outpaced the first half of 2024 by 14% is pretty significant. But what we're seeing with the free market in particular is a trend that really I feel like a broken record, because ever since HSTPA, investors are moving away from rent stabilized, focusing on free market. The first half of this year, 51.45% of the transactions were properties that were less than 6 units. So did not have any sort of rent stabilized aspect to it. And that's what's really moving. Neighborhoods like Williamsburg, Greenpoint, Greater Brownstone, Brooklyn, they're always going to be strong performers in the multifamily market. But we're seeing other neighborhoods that are further away from Manhattan that have more of these smaller, less stabilized assets that are really taking off. So 2 examples, Bed-Stuy had 31 transactions in the first half of this year. Only 5 of those properties contained any sort of rent stabilized units. Borough Park had 21 transactions. Only 3 contained rent stabilized units. So it's a trend that we're continuing to see post 2019, and I don't see that slowing down anytime soon. So like you said, in the multifamily market, fundamentals are solid. Demand is high. Rents are through the roof. There's limited supply, and Sean can address that when he speaks to development. But everyone's looking to the horizon. Interest rates, regulatory reform, and of course, the upcoming mayoral election are all going to play a role in shaping what the second half of the year is. And I'm looking forward to riding the wave.
Yeah, that's pretty interesting. You mentioned the $2 billion of transactions in multifamily, which is about half of everything that traded in the first 6 months of the year in New York City. So Brooklyn is taking a big chunk of it, or 50% of it, which is pretty big. And you mentioned the undersupply of housing that pushes prices up. And we're going to talk about that next. In fact, last year, we've seen the city of yes, we've seen the housing policy from the state. In fact, both Adams and Hochul worked hand in hand to help development, to help the supply of housing. It's not enough. We know that. The 485X did not address bigger sites. So most of what's trading is for 99 units and under, but a lot is trading. Sean, what do we see there in the development market, which kind of woke up since the housing policy in the city of Yes in Brooklyn?
Sure, Shimon. So first half of this year was really strong. 68 transactions, $610 million. What I think is really significant is that we've eclipsed the $300 per buildable per foot level for the first time in Brooklyn. It's the second highest price per buildable, second only to 2023 when we hit $296 per buildable foot. What I think is interesting, and you just touched on it, as a city, we're starting to think differently about our housing policy. And it seems like the conversation is shifting a little bit, getting us back to creating incentives for developers through rezonings. Like the Gowanus rezoning was very successful. We're seeing the fruits of the Atlantic Avenue mixed use plan come to fruition now as we're working on a couple of sites there. That's the next area where the rezoning will have a really strong impact on the market. The Gowanus will create 8,000 new units. Atlantic Avenue, a smaller rezoning, will create 4,600 units. Then you had the city of Yes. And now, we've heard recent reports about also just trying to find ways to expedite the development process and get things through the pipeline quicker. And that's what's really encouraging from a policy perspective.
Yeah, and that is encouraging, and we're seeing this across the board. We still need incentives to develop bigger housing, but you can't ask for everything. One of the things we did see do well in the past, I want to say 12 to 18 months, is retail sales in prime locations. Sean, one of the things you and I spoke about is the institutional quality of buyers that are in this specific market. We haven't seen that in a while. You want to talk about that a little bit before we close off?
Yeah, so this was just great to see. And it speaks to the investor, the institutional capital commitment and conviction about the Brooklyn market. And that's particularly in Williamsburg, where we saw Acadia Realty pick up more than $100 million in real estate, and a little bit smaller transaction, but Empire State also picked up a large portfolio. And that's right in the heart of Williamsburg, that North 6th, Bedford, Berry, Wythe corridor. And it's nice to see because the retail market took a real hit in Brooklyn from COVID. This is probably the most significant institutional investments in the retail market we've seen since pre-COVID. And I think both of these transactions were really priced to perfection, right about a 5 cap or slightly below that.
Thank you. So if we want to recap, Brooklyn is transactional. Retail has done well. Development is doing very well because of the housing policy, the city of Yes. And we're seeing that trades better. And lastly, free market multi in general is doing phenomenally, mostly in the smaller segment of the market from a transaction perspective. So Brooklyn is on the rise in a way, and we hope to continue to see that through 2025. Thank you so much, Sean, and thank you so much, Stephen, for this.
Thanks, Shimon.
Thank you, Shimon.